G'day, my name is Brian Johnson. I want to talk about limit orders. This is series 2, second video, to give you some ideas to think about for using limit orders. Okay, I want to first of all refresh your memory on M1. We put on the Fibonacci in between the two squares. You can see the line between those two, and we had the 61.8 and the 23.8. If we move over into the daily chart, you can see how these line up pretty well with boson lines as well, and we have the points on here. They're handy for using for limit orders as well. Another concept is to apply the 10-day highest high and lowest low. That is why I'm in the daily chart. This first one just happens to be the highest high as it's moving up, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. But you see the lowest low over 10 days is 105,239. And you happen to notice that the 61.8 on the daily chart is very close to the actual boson lines. So it can be used as the 61.8 using Fibonacci and using these 3 points as entries. And if you notice, this one is about 120 pips away from the current price, close on Friday. We had said that if you're trading, in another discussion, trading on a strong market trend up before the rollover, you can go half the trading range. So in other words, the trading range was moving up from 127 to 162. You have to put the pips in, and you can see the high to the low is 54 pips. Alright, and you can see the long and the short and the reward risk factors. But if we were trading just slightly before the Wednesday for Thursday's rollover, and we want to be in the trade, we can raise our first limit order up, say 50 pips, which is half, using roughly half the trading range, 60 pips, 50, depending on how strong the market is up, so that you capture the first rebound. If it rebounds down further, you want to be about 100 pips away, 120 pips away from the total. So you move your next limit order down below to the nearest boson line or the Fibonacci line, whichever gives you the right amount of pips. As the trend is down, you want to capture more pips, and always, if you take profit on the rebound just before the rollover, you can take off your lowest highest landed cost and leave one on your lowest landed cost, etc. This is a method of keeping your cost and keeping you in the market on that particular currency. Okay, we've discussed the highest high for 10 days, the lowest low is another line you can use. It gives you a figure that your highest high, there's an old saying, sell at your highest high and buy at your lowest low. It's quite a nice little method of trading, and one can look at it, and the 10 days seems a nice little round number. It's one of Rick Richardson's preferred methods of trading the share market, and it seems to look and it is quite good on the Forex as well, buying at the lowest low and selling at the highest high, using limit orders and placing them for the to the trading range. So there are two methods, and you can apply either one. I favour using Bosun's lines and the Fibonacci for the monthly and see the points on your chart. The other thing handy to know is on non-US brokers, one can hedge the same, so that if you are lucky enough, and I say lucky enough, to have 3 positions on, all would average each other's prices anyway down lower, and you only take the highest profit at any one time, which means in the end you're finishing up with the landed lowest cost, and at all times you can position average below that. One can apply the simple bias system of trading, which is having in a non-US brokers positions on favouring the sell, locking in your current positions, earning your interest on your money as you trade, which the Australian dollar, US dollar provides one of the highest interest trades, good trades, safe trades, and local knowledge helps you. For example, it's quite often said that the Australian dollar may still go up to $1.20 next year. $1.10 is pretty conceivable figure to reach for the Australian dollar. So knowing local knowledge helps. Keeping your eye on economic forecast, looking at the Forex Factory's economic data, looking at data coming out in the local paper, Australian News, advertiser news, internet, financial news. You can keep track of the Australian economy and the current rates, as rates drive the currencies to a large degree. The flow of money is always following interest rate with surplus funds laying around. It shows sometimes that that is the currency that you should be trading. Okay, that is just another way of trading. On this chart you obviously have Brian's index showing you the way the currencies are currently going. You have the volume buys and sells, all help you make, and these help you make very good decisions. And here we've put on the LSMA, which blocks out the price so you can see the trend, and you can use the MW patterns on this for trading scalping. The other method of trading I've talked in this one is purely the method of trading using Bosun's lines, or as in the first video, or the Fibonacci, which duplicates Bosun's lines to a large degree. Not 100%, but they do follow some of Bosun's lines. I've also discussed the highest high, lowest low 10 days, the highest high of 10 days and the lowest low of the last 10 days as extra points for you to look at. Bye for now from Brian. God bless. Have fun trading. I hope this helps. Don't forget that one can always use, instead of stop loss, biased. So on non-US brokers, one can hedge the same currency. So if you had 3 positions on, in theory you could put 3 positions on short, lock in your hedge price and trade the new trend. Bye for now from Brian. God bless you.